the video.
Primary use of proceeds generally is just to acquire Bitcoin. So Bitcoin is up 145% since August 10th of 2020, 3 years ago when we started on the strategy. And we've pursued a strategy of levered Bitcoin investment. So we use cheap capital. Our average cost of capital is like 1.6% or something in that range. And the combination of leverage and then offering our shareholders a yield. We don't charge them a fee to manage this Bitcoin. We actually aim to generate a yield. That's allowed us to actually generate 254% performance at the same time that Bitcoin was up 145%. So our strategy is sort of levered long, offer a yield, don't charge a fee, and then actively manage our position and actively manage acquisitions and financings between equity, debt, and cash flows in order to get the best result for our shareholders. Spot ETF would be ideal for the market. A spot ETF will allow large hedge funds and sovereigns to come into the space with billions and billions of dollars and track the asset. MicroStrategy doesn't charge a fee, and we actively manage the business to generate a yield, and we use leverage, and we can actually tap into leverage because we're an operating company that an ETF couldn't do. So we view it as being really beneficial to the entire ecosystem. We don't have a capital structure that would allow for tens of billions of dollars to be invested in Bitcoin. So we're a unique instrument. We're that sports car, and the ETFs, the spot ETF is going to be like super tanker. The operating company provides diversification for investors versus the volatility of Bitcoin, and it also allows us to borrow money very cheaply. Our blended cost of capital is like 1.5%, and we're able to invest that money into Bitcoin. And on the other hand, our Bitcoin investment is Bitcoin itself is up 145% since we started buying Bitcoin, and that Bitcoin position creates the volatility in the stock that allows us to borrow and raise capital cheaply in order to buy more Bitcoin and grow the business.
The price of Bitcoin is fluctuating inside a narrow trading range for several days, and August 3rd is no different. Bitcoin price fell nearly 1% to around $29,500 on the day. Still, the move downside was part of a flat market trend that started a week ago, wherein the price has traded inside the $28,850, $29,660 range. The sideways trend follows Bitcoin's 4% drop below $30,000 last week, primarily due to the Federal Reserve's interest rate hike. Rate increases have historically been bearish for non-yielding cryptocurrencies like Bitcoin. Nonetheless, Wall Street economists anticipate a rate hike pause in the next Fed meeting in September, which may be limited Bitcoin's downside below $29,000. On the flip side, the BTC struggles to stay above $30,000, a psychological resistance level, due to broader market risks. That includes regulatory uncertainty around Binance, the world's largest crypto exchange by volume, and a recent DeFi exploit costing $47 million. The ongoing bias conflict in the Bitcoin market has coincided with depleting institutional interest. According to CoinShares' weekly report, investors withdrew about $19.4 million from Bitcoin-based investment funds in the week ending July 28. From a technical standpoint, Bitcoin currently holds above its 50-day exponential moving average, 50-day EMA, the red wave, while eyeing a close above $30,000, its immediate resistance level. If the price breaks above the $30,000, then BTC's likelihood of rallying toward $31,500, a local peak level, is high for the month of August. The upside target seems valid as long as BTC price trades above its multi-month ascending trendline support. Nonetheless, breaking decisively below the 50-day EMA and the ascending trendline risks crashing Bitcoin toward its 200-day EMA, the blue wave, near $27,000. This level served as support during the March-April session earlier this year.
Well, really, there's a growing consensus that Bitcoin is a unique and valuable international asset, and that's being endorsed by politicians, being endorsed by regulators, it's being endorsed by investors. You're hearing money managers like Larry Fink say this. And that has created a change in sentiment. The odds of a spot ETF being approved were 1% 6 months ago. Then they went to 50%, and this morning they were 65%, according to Bloomberg analysts. So that's really driving the near-term sentiment. But plus the fact that there's so much chaos in the crypto industry, Bitcoin is emerging as the safe haven institutional asset if you want to play this space without trying to parse through the politics, the legal, and the regulatory complexity. Bitcoin you could think of as this beautiful house in a scary neighborhood that you have to pay for in cash, takes a year to buy, and you can never rent it. The spot ETF is like that same beautiful house in a nice neighborhood, and you can buy it tomorrow, no money down, and you can rent it, refinance it from your bank. It's not a threat to MicroStrategy. MicroStrategy is like that beautiful house with 10,000 acres of ranch land behind it that generates cash flow, that has a management team that can borrow money at 1-2% interest in order to develop the land. So we offer yield and we offer leverage through active management, which is unique for a set of our investors. We obviously don't have room in our capital structure for tens of billions of dollars of sovereign wealth or major hedge funds, so they need a spot ETF in order to take a position in the space. Looking back 3 years is very clarifying. 3 years ago, Bitcoin was about 10,000. And so if we look at the 3-year chart from August 10th of 2020 to today, Bitcoin's up 145%, the S&P is up 37%. The S&P is the cost of capital. Gold is down 3%, bonds are down 18%. MicroStrategy's up 254%, and our enterprise value has increased by a factor of 10 by, $8 billion or something. So we're glad we adopted Bitcoin. We would say that Bitcoin is returning 4x the cost of capital. And if you're not getting 37% gain in those 3 years via the S&P, then you're not keeping up with the cost of capital.